Okay guys, hello and welcome to the past video weekly update for September the 14th, 2014. Two pairs I'm going to look at with you this week on the charts here, just loading them up. The first one is Canadian dollar yen. Okay, so as you can see here, we've got a preceding trend here, and I'm just going to take you through, just for a moment, I'm just going to take you through how I determine who's in control here. So as you can see here on this candle, you can see that this closing price of this bull candle is at the same point as the open price of the previous down candle. So I would say here at this point here, bulls have taken control of the market because they've erased all of these losses. So as you can see here then, from this open price, bulls just pushed straight up and closed near enough the top. Here, this candle, again, it's a bullish candle, but there was a little bit of the bears coming down here, but again, pushed back up and closed, not at the top, but it's still quite clearly a bullish candle here. Similar story, opens at the bottom, pushes up and closes relatively, well, not quite at the top, but it's still clearly a victory for the bulls. But here, when we get to this candle, it's a different story, because as you can see here, the body of the candle is much smaller and the wick is much longer, multiples of the size of the body of the candle. And these are the sort of reversal candles, the long wick reversal candles that we like to see. So this denotes, this is communicating to me that the bulls managed to push this up right up to here, over, it's like, you know, over 150 pips. But look, the bears said here, hang on a second, and pushed it right back down. And right now the momentum is probably balanced, but if I was a bull at this stage, I would definitely be worried. So what's going to happen over the course of the next few weeks? Well, as we always say, we don't actually know. But what we can say is that we can map out a few scenarios to see what may happen, and we can decide on which scenarios in which we want to play defensive and which scenarios we want to get aggressive. So of course, what could happen over the course of the next week? Well, the bulls could open up here on Sunday night, Monday morning, and just shoot off up to the upside again. Perfectly possible that the dominant preceding trend continues and the bulls just continue on up. If that was the case, we wouldn't want to be involved in the market at all. So we would be playing defensive, keeping any losses as small as possible, and just really standing aside, not getting involved. The second scenario that could play out could be that you could see the bulls taking a bit of a rest and a bit of two-way sort of range in action after this uptrend. So you could quite happily see a few candles here just moving sideways, with neither the high or the low of that candle being broken to any large extent. Again, in that excuse me, in that sort of scenario, we will probably would take a few losses. There probably would be a few trades in there that I would take, but again, until I started to really see the bears beginning to take control of the market, I would be tending to err on the side of caution, making sure that losses were kept as small as possible. And if the winners didn't pan out, well, I would just be patient and wait to see what happens. The third scenario, of course, is the one that I would like to see play out the most, and that is the scenario in which, if it does play out, I will be getting aggressive. So I will put in red here because that denotes my aggression. So what I would love to see is to see the market open here. Sorry, that's incorrect. The market open here on the, that's terrible. The market will open here on the on Sunday night, Monday morning, and I would like to see the bears be energized by this long wick and see them push price down to the downside and continue on down. So we could see, just as we've seen 4 straight candles up, there's nothing to say that we couldn't see at least a couple of candles down, if not more. And so in my view, our best case scenario is that there could be the guts of 500 pips here to play for. to sort of sum it up, what I always try to do is to try to play a large time frame candle reward with a small time frame risk. So what some people will do there to play that candle signal, and some people will definitely be playing this candle signal with this type of scenario here. So I'll just get rid of that. So people will, the ordinary way, they'll enter on a break of this low and they'll put a stop above the high. So that's what, 96, that's 100, and this distance here is 150 pips. So they're going to need to get a positive risk reward, they're going to need to get price down to here, or even to get it positive down to here. Now that's another 6 week move potentially, and you could be waiting weeks for anything to happen here until this stop gets taken out. It's far too big a risk. We can do that, trade the same signal but with far smaller risk, far smaller risk. We don't need to wait until this high gets taken out. What we do is we can move down to the lower time frames. So on this one, I'm going to go down to the 4-hour chart and draw trend lines and trade off the trend lines, and trade very conservatively off the trend lines until it's clear that the market is moving in our direction. So as you can see here, the market has clearly moved to the upside. Fairly healthy trend here, up and down. But as you can see here, last week there was a strong move up, but the bears took control and took things straight back down again, so it erased all of those gains. So let's zoom in here for a moment and we'll just see excuse me, just see if there are any. Well, immediately there are a few lows that jump out at me here in terms of what I'd be looking at. I would look at I'd be looking at this low, this low, this low, this low. Those would be the key levels that I would be thinking of keeping an eye on, and I'm just going to see if I can get a line that suits here. So drawing trend lines, it's an imperfect, it's an art, it's not a science. Some people draw them, some people prefer to draw them in these breaks, small breaks here would fry some people's heads. For me, I'm not really all that concerned about it, to be honest. It's only really to get a broad it's a reference point. It's to give me just an idea of the structure of the market. I don't need it to be perfect. So I think, let me see. I think something like that is fine for me. So test here and a push away, test here, push away, test here, big push away, and we're back down at the same level again. So remember the three scenarios that we looked at before. Which could play out? Well, obviously, as we said, you could quite easily just have a big push off the bulls off here, and we can just head off up to the upside. If that's the case, we want to remain conservative and possibly not trade at all. The second scenario that I like, that I do trade, and I will be active, is that if there was a range, we don't know whether it's going to be a range or not, and I wouldn't mind seeing a little bit of like this sort of consolidative action up here like this, in such a case I'd quite happily draw a trend line up here like that. If it materializes, it may well not materialize, and trade a break off that and then a break off this. Or the best case scenario, obviously, will be come Sunday night, the market, I'm going to go red here because that's me being aggressive, the market opens, breaks this trend line and just moves to the downside, just straight away aggressively down. I'll take an entry somewhere around here, and I think that that low there would actually look like a decent So yeah, I'd be having a stop somewhere around there. So that would be my stop, that size. What's that? 25, 30 pips. And I would be, remember, back out to the long-term time frames. We're talking about potentially hundreds of pips. So that would be my preferred scenario. The other good one would be is a break of this trend line and then a retest. So we would potentially get out here. As you know, if we got a break here, I'd be looking to get a stop to break even here to take my risk off the table. But if we got a breakdown here, a retest, I would be screaming short here at this level in anticipation of another breakdown. But again, there's nothing to say, there's nothing to say that price couldn't be a failure. Price could come down, back up, come up here, and then move off to the upside. What we can't predict what's going to happen. All we can do is outline what we would like to happen, and then if price transpires to move in the way that we want it to, we can get really, really aggressive. An awful lot of these trend lines don't actually work out, but the ones that do can offer really, really, really good trading opportunities with really tight risk, tight stop, and large long-term objectives. So that's pretty much it for. I'll tell you what I'll do one more. There's one other pair that I was looking at. It's the old favorite, Euro USD. You see a similar situation here. If you want to play something from the bull side, strong downtrend, clear reversal candle here. There wouldn't be anything to suggest that price couldn't move up here at least 100, 200 pips. Whether it happens or not, it's another situation, another thing. But just to show you, I was looking at this one towards the end of last week. You see this trend line here, drawing off those, this high, this high, this high, and look, break and retest, and then a push away. So I would be happy to consider buying anywhere along this trend line in anticipation of a move away. So with tight stops somewhere along there on a break of that and then down to the downside, I'd be standing aside. So that's pretty much it. What's the key? The key is always don't try to rely on technicals and on candles and trend lines. They're secondary. The most important thing is that your losses are kept as small as possible, and you always allow your winners the opportunity to grow as large as possible. You very quickly find out if you're knocking losses around 0, 20, 0, 20, 20, 20, 0, sooner or later you get a 200 or a 400 or a 600. They do happen. It just as a matter of maintaining strict money management. Let you make sure that you have enough capital in your account to sustain the inevitable run of losers, and then take advantage of the winner when it comes. Don't jump to take your money off the table just as it's beginning to develop. So if this is I hope you found this useful. If you're watching this for the first time, there's a link to Forex Useful below where you can register to get the free ebook on which this video is based, the past strategy ebook, and there's also another few goodies in there that you can register and get for free as well. There's a few different strategies on forexuseful.com. There's also the forum over on Earn Forex where we share some of the setups and answer questions and stuff like that, so you can pop in there and say hello. I think that's it. All the best for the coming trading week. Remember, keep the losses small and manageable and let the winners run. So thanks for watching, and I'll see you again soon.